Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Recently I posted a video about this accumulation schematic, this occurring on the 8-hour time frame, so potentially in the process of forming yet another higher low after the spring. That's accumulation on the micro scale, but what I want to talk about in this video is, are we seeing further distribution on a more macro scale? Because remember, this is a 3-month distribution range which broke down and has since been in this wedging structure, potentially faking out, or at least faking out for sure here, but still maintaining this wedging structure nonetheless. So I'm going to be juxtaposing this macro distribution range with micro accumulation and how these two perspectives tie in together. Subscribe to the channel for more videos like this in the future, and let's dive right in. So I'm not going to talk about the accumulation range in too much detail because I spoke about this earlier today, but basically speaking, we need to see 33,000 turn into support because that's going to essentially give us a nice series of higher lows after the spring, which recently happened to the 28K region from this accumulation range. So effectively, we're trying to reclaim previously lost levels, right? Because we lost 33K over here. And then we actually lost 31K over here for that spring to happen. So breaking supports here, and now we're reclaiming supports here and reclaiming supports here. Effectively, Bitcoin needs to reclaim 33K to just rebound from here and transition from phase C to phase D. So most importantly, one of the questions I'm getting is, can Bitcoin's price action transition from distribution so quickly into accumulation, right? Because remember, this is an 8-hour time frame and this is a daily time frame. And if we just focus on this distribution range from around mid-February to mid-May, that's 3 months. So we saw a distribution range form for 3 months and we broke down from there, right? When we look at the accumulation range, we've seen it form from arguably mid-May to mid-June. So that's 1 month. It's actually now at this point in time 6 weeks. So can we compare a 3-month distribution range with a 1 month, 6-week accumulation range? Can Bitcoin break down from the distribution range and then quickly transition into an accumulation range? And the way I'm thinking about this is that because you can still make a case for macro distribution, because nothing's really changed in terms of my perspective in that regard, right? Because we're still in the last point of supply and sign of weakness phase, effectively speaking, because recently we've been in this downtrending wedge for a while now, and we know that we've broken out from here, but it was effectively a fake out because what we saw was a breakout and a failed retest, and back into the downtrending wedge we go. But overall speaking, what I was talking about is that this wedging structure needed to resolve towards the upside to revisit this area and turn it into a resistance to just confirm this Wyckoff distribution range. Because remember, this is the distribution range, this is the breakdown, but we haven't seen the recovery to turn a old support into a new resistance. This is what I'm looking for to just confirm this macro distribution range. Macro meaning 3 months relative to the 6-week accumulation range. So effectively speaking, if we now saw a fake out, it didn't quite reach this area, so it's still an unconfirmed Wyckoff distribution range. But if we're still seeing Wyckoff accumulation right now, and that there's a good chance that we'll break out from this micro accumulation, and by micro I mean 6 weeks, micro 6 weeks, macro 3 months. So this micro accumulation range doesn't equal the macro distribution range. They're not the same. There are different time frames. And if you just focus on the higher time frame, for instance, the monthly time frame, if you see a breakout on the monthly time frame, you're going to see a bigger result in Bitcoin's price action as opposed to seeing a breakout in the 8-hour time frame. Because the higher the time frame, the stronger the trend, And the lower the time frame, the weaker the trend. So if we see a breakout on the 8-hour time frame, then it's not going to be the same sort of strength that we saw in the strength in the downtrend from a breakdown from the distribution range. I hope that's clear. Because of course, if you see 3 months of distribution, then we see strong cascading sell side pressure, as opposed to just accumulation, which is going for 6 weeks, and a breakout from here isn't going to be the same order of magnitude in terms of the upside relative to the distribution range as a whole. So just to marry these two perspectives then, is this potential accumulation range, a means to an end, in just enabling this wedging breakout to just finally test this area, to just confirm this potential distribution area or not? And if we reject from here, then we'll probably see further distribution towards the downside as per the schematic, right? Because we're in this last point of supply zone of weakness phase still. Of course, this lower high and lower low structure should be happening at the bottom of the range, but you can see here that this structure is below the range slightly, right over here. We should be seeing it at around these regions here, but it's slightly overextended towards the downside because of the crash. So it is a little bit lower than the schematic suggests, but nonetheless, if we reject from here, if we break down from this wedging structure, then we're entering phase E. Right? If we break down from this wedging structure, we're entering phase E. But of course, if we break out from this structure and reject from here, which is essentially the bottom of the range, turning this bottom of the range from old support into new resistance, if we reject harshly from here, then that would effectively also mean that Bitcoin could effectively enter phase E. But my idea for a while now has been that historically, Wyckoff distribution ranges don't mark out bull market tops. They mark out local tops, but historically we tend to see a distribution range form, break down, and then a recovery. And once we're at this pivotal point of turning the bottom of the range into new resistance, Bitcoin actually breaks out past that resistance and actually then later pulls back to turn it into support and then continues its bull run. So breaking back into this range would be really positive for Bitcoin's price action, but at the same time, you have to remember that there will probably be a higher low somewhere in the midst. So this accumulation range, I doubt it's an accumulation range before the next bull market, or at least before the next bull trend to new all-time highs, because of how short this accumulation range has been. Of course, if it goes on for a few more weeks and months, then that will probably change my mind about that. But at the moment, this is a relatively short accumulation range, and I'm looking at it through the lens of a micro view. So this would effectively prepare the next potential relief rally for this overall distribution range. So a breakout from here. So effectively, we're seeing micro accumulation, which should serve as a means to an end to this breakout from this wedging structure to now test this macro distribution range and decide whether we're breaking down from this macro distribution range. Is this now going to be a confirmed macro distribution range, or are we going to see a break back into this range, this distribution range? So many people might be talking about phase C on the micro scale. Apologies for mixing those up. They're very similar, and I know that it's really important to just be clear. Micro, because this is the 8-hour time frame, and this is a spring. We saw the test. We're seeing yet another high low potentially form, and then we're going to be entering into phase D. But this is probably a means to an end in terms of satisfying this current phase in a potential macro distribution range. But at the same time, I don't necessarily feel that we're going to see phase E if we're able to break back into the range. So at the moment, we are making some moves in terms of a potential micro accumulation on the 8-hour time frame. There are arguments that you can make for that, and we're seeing higher lows and reclaiming of levels, and that's positive. But we haven't yet seen a conclusion to this macro distribution range just yet. So I'm going to talk about this in a bit more detail through the lens of the death cross and the 4-year cycle in the next video. So if you'd like to check that out, feel free to subscribe just to let you know when that video comes out. That's about it for today's video update about macro Wyckoff distribution versus micro Wyckoff accumulation. I hope you found it useful. I hope you found it helpful. Like the video if you did, and of course subscribe to the channel for more videos like this in the future, and for the video where I'll be looking at this through the lens of the death cross and the 4-year cycle. I'm Rekt Capital. Thank you so much for joining me in today's video. Thank you so much for watching, and I'll speak to you in the next one. Speak to you soon.